Hello and welcome to another episode of Risk and Revolution. How you doing, Mike?
Good, Evie. How are you, brother?
I'm doing well. So
Good.
I'm Ivi Amira with my dear friend, and today we are joined by Angela Grant, Chief Legal Officer at Palomar, recently a public company. And before, Angela will talk a lot about Palomar and what they are doing. What was really touched me in this conversation was how insurance really impact Angela and the way she, like the journey of her life with her private story. That's
Yeah,
awesome.
yeah. Angela. Anybody who knows Angela Grant knows that she is an incredible force in the insurance industry. I've had the wonderful pleasure of knowing Angela for almost 15 years now, and she's been a close friend and a mentor. And I was really excited that she joined us on this episode and talks about her past and talks about where she came from and how she worked her way through the insurance industry all the way back from her time at Geico, going through law
Hmm.
school, becoming a lawyer. But the piece for me that I think folks are going to be most excited to see too is the humble look on insurance and compliance and the regulatory environment and why the things work the way that they do and why those things are so important. It's a really interesting conversation, especially as we move into an environment around technology and AI and other things that are going to kind of flip a lot of the compliance regulation and other things on its head. It's super, super awesome perspective to have somebody like Angela talk through that.
So I think we cannot keep waiting, and without further ado, let's jump in.
Yeah, enjoy the show.
Enjoy the show. Hello, guys, for a new episode from Risk and Revolution. And today we have the honor to interview Angela Grant from Palomar. Hello, Angela. How are you doing?
Hi,
Hi, Angela.
hi Mike. Hi Abby.
Everybody
Nice
on the
to
screen.
be on your podcast. Thanks for the invite.
Oh,
Thank
thank you
you.
so
Thank you
much for being
for
here.
being with us. Yeah.
This is great. This is great. We're going to have a really fun-filled episode. We're going to talk about all things tech and compliance and all the fun things about insurance. So this is great. Evie, I can jump in if you'd like, man.
I think, yeah, we're ready to go. Why not?
Awesome, awesome. Angela, so great to have you here and so good to see you as always. I love your career. Obviously, I've known you a long time, but our listeners may not. You are now Chief Legal Officer at Palomar, which is a publicly traded company, but I know you have an incredible backstory. Would love for you to go back in time and tell us how you started your career in insurance.
Oh gosh, how much time do you have? I've been in insurance for a long time. I'll see if I can give a succinct history of my career. It's been a fun time. As you know, Mike, I love insurance. I've been in the insurance industry since 1989, so I'll let you guys do the math on that.
All right.
Started as a college intern for government employees insurance company. So I was at Geico during the rebranding to the Geico, everyone knows that name now. Worked in what was basically first notice of loss while I was in college. So I started my career in insurance by happenstance on campus at the University of North Texas looking for a job that paid more than the on campus jobs and saw an ad for government employees insurance company. After I graduated from college in 91, I became a claims intern. And so I worked through all the levels of claims up to and including litigation, all through levels of litigation. I did training. I was a guest auditor where I traveled around the country and visited different offices. The two jobs I never did though were subrogation, and I was never on the appraisal side. So those are the two claims jobs I never did.
Okay.
So I was with Geico for 11 years. And that was in the Dallas office, Region 5. And then I also worked in the San Diego office, which was Region 4. Can't believe I even remember that. I also worked for Kemper, the specialty brand of Kemper. I was actually with Kemper when they were Unitrin out of Chicago, a holding company that acquired small insurance companies to put them together. I worked for the Unitron brand that became Kemper during their rebranding. So branding, and it became a theme in my career. I was also a part of the post-acquisition team putting two insurance companies together during law school. And so I worked for Kemper for 12 years and did all kinds of jobs there. When I graduated from law school, because I was in law school while I worked for both Geico and for Kemper, I post-graduation did the sort of first official legal and compliance role for Kemper's specialty brand out of Dallas, Texas. Had a team of amazing folks who did everything from legal to compliance, mock market conduct examinations, all of the filings related to forms, rebranding from Unitron to Kemper. Loved my time there. I left Kemper after 12 years and joined Esurance. And I joined Esurance post-acquisition from Allstate. So I was a part of the, again, post-acquisition team coming in to sort of help Esurance along its way, navigating into new lines of business. They borrowed from Kemper the renter's endorsement that attached to the auto policy that we created at Kemper. They also launched the homeowners product, which was amazing and innovative back then, which was, I want to say 2012.
Yeah, I feel like I know some people that had something to do with launching that program back at Insurance back in the day.
Yeah, which is where I met the amazing Mike, who became the underwriter on the homeowner side for Esurance. And so I worked with lots of great people. I was with Esurance for almost 5 years and left after doing some amazing work. If you go to my LinkedIn profile, you can see all of the stuff that we worked on. Mike was very involved in all of those things. We had lots of opportunities around system issues that we had to navigate with regulators, also bringing new product offerings to market, trying to meet all of the deadlines, onboarding a new platform, lots of stuff. It was all good stuff. And funny enough, I was thinking about this morning. I was in the role of director of compliance for 15 years between both Kemper and Esurance. And it was really where I learned all of the different things that I know now. And so I spent a lot of time taking on new assignments, handling special projects, never turned down any work. Now, some of the people who've worked for me over the years probably had an issue with that, and I apologize to you all. But it was the right thing to do, because who turns down work? It's an opportunity to learn something new. Now, over time, you evaluate and you decide whether or not it's work that truly belongs to you, or it should maybe be reallocated to a different place. I had the pleasure of working with Mike on lots of super cool things, not just at Esurance, but when I left Esurance, I actually followed him to Hippo. So I think it was employee 13 at Hippo. I don't remember exactly, but I joined officially the week that Hippo launched their first product in their first state in California. And Mike and I did some amazing, fun things, bringing the homeowners products to the direct-to-consumer space at Hippo. I stayed at Hippo for about 18 months, and then I went to CSC Insurance Group for a spell. It was around the same amount of time, 18 months. I call Hippo a startup. I call CSC a restart. CSC Insurance Group was owned by Covea out of Paris, and I think that they have wound that business up at this point. I stayed there for 18 months, and then in 2020, during COVID, joined Palomar. And I've been at Palomar now for 5 years. And as Evie, you mentioned, I'm the Chief Legal Officer for Palomar, and I'm having a great time here. So
Awesome.
hopefully that didn't take too much time, but that's my career trajectory. My primary responsibilities here at Palomar are legal, compliance, and claims. I'm also involved in M&A, as well as strategy, corporate governance. I'm also the corporate secretary for the company. Palomar is publicly traded, and we do business in all 50 states. We have both admitted and E&S companies, as well as agencies. We do lots of different things. Our core lines of business are earthquake, inland marine, other property, casualty, fronting, and now crop. So
It's amazing.
Angela, how a person become in love with insurance?
I think that's a really good question. For me, I had a personal experience with insurance as a child. And
Okay.
I was sharing this with a group of folks the other day. Actually, I was in an apartment fire with my family when I was probably 4 years old, where the
Wow.
apartment building burned down basically. And it just so happened, or perfectly occurred, that my father, when he went to renew his auto policy 30 days prior, his agent offered to him a renter's policy. And he agreed to take that renter's policy. And when the fire occurred, my parents were able to pick up the pieces pretty quickly and purchase their first home in their early 20s because of insurance. And while I don't think I tied that together when I was in college, when I was, working for a government employees insurance company, I realized in
Connecting the
retrospect
dots.
years later that the reason I always had a soft spot for insurance is because I have a true appreciation from personal experience about how important it is.
That's amazing.
Wow. Nice.
That's amazing. I don't know that I've ever heard that before. All the things I know about you,
I
Angela,
know. Yeah, yeah,
that's
yeah. It's true. True
that's unreal.
story.
That's unreal. Well, your background's incredible, and I think it's going to make for a really fun conversation today because I think the legal and compliance world has changed so much from technology over the last
Yeah.
couple of years, especially over the last 10 years, and the navigation that you've had, right, over that time. I would love to ask another question, and then Evie, I'll turn it back to you. But Angela, I would love your perspective. You worked at Hippo, you worked at Esurance. Esurance to me is actually the first true direct-to-consumer homeowners platform that existed, right? What was
Yeah.
built there. How do you navigate like the compliance and how that has kind of changed over going from, the Esurance environment to a startup like Hippo to now at like a publicly traded company like Palomar?
That's a great question. I think the regulatory space has been slow to keep up with technology and the insurtech sort of movement that's occurred. The challenge is always to make sure that you appreciate the regulatory schema that you're selling products in, and be respectful of that so that you don't, sort of fall into some sort of pitfall that you didn't intend to with your go to market strategy. And so the biggest change for me has been explaining and educating to regulators how direct to consumer is different from the agency sort of distribution model, and how you can still convey the importance of the product and how the product works to the consumer directly without having a third party involved. Even though the secret sauce behind even direct to consumer is agencies right in the middle of that. I don't know what the current data on that shows, but I would guess it's at least still 40 or 50% of all business. An agent is somewhere involved in the process, even if it's direct to consumer. So the biggest difference for me has been being able to paint a picture that visually illustrates what an agent would be saying to a customer in a direct to consumer sort of quote flow. So making sure that they understand what they're purchasing, how much it costs, what it covers. And there's still tons of work to do around that, whether you're talking direct to consumer or agency, for a customer to understand what they're buying. Like, I think that AI will help to advance that, and that's a conversation for another day. But there's opportunities for us to be able to very succinctly describe what someone's purchasing that attaches on top. And if anybody goes to market with this, I'm going to send you a bill for my idea that attaches on top of the policy contract. So there's opportunities for us to even be better. But when you're in the quote flow, the customer needs to be informed along the way about what is it that they're doing. It's not click to buy. Like, you're not buying eyeshadow. You're buying an insurance product. You're buying a promise to be there if it's needed. The carrier should be there when it's needed. That's all insurance is. It's just a promise to be there in the future, right?
Yep.
So that's been the biggest challenge, is getting regulators comfortable with how the transaction works. So early days, providing screen prints of stuff, and when we get Department of Insurance complaints, people claiming they didn't know that they purchased an endorsement that excluded something, be able to show how you explained it to consumers. We did a lot of that, Mike, you remember, at Esurance, right?
Yep, yep, yep. Oh, that's great. That's super great. That's super great.
Um, interesting for me is to ask from a different perspective about the products, insurance products. So you're familiar with all the traditional ones, homeowners, commercial, etc. But what is interesting from maybe from your side, from your legal and compliance perspective, is about parametric products
Yeah.
and yeah, specifically about parametric products, because
Hey,
this is like from first of all from the insured, the customer perspective is a bit different, and also the agent need to understand it much carefully maybe, and the company that going to sell this product is different from just an homeowner policy. So yeah, what is your take on that?
I would say my overall take on parametric is that it's a much needed supplement to the insurance market. So, parametric insurance is here to fill gaps that clearly exist for consumers and for businesses. Things that are excluded or never considered in an insurance policy contract can be provided through the parametric process. And it also provides benefit if it's an agent. An agent is now appearing to be much more informed when they can say, hey, you have this base policy which covers these things. But there are other things that could also occur that a parametric product could provide benefit for. So agents are more informed when they can share that additional supplemental benefit with their customers. The customer gets a much faster turnaround if they happen to have to use that parametric product, because parametric is really if this then that, right? So there are triggers involved, and if those triggers occur, the policy pays. Versus the traditional products like homeowners and auto and even commercial, you report the claim, then the claim is open, then there's an evaluation of whether there's coverage, then you have to investigate whether liability applies, and you have to do the evaluation of how much should the policy pay, because the policy is not a set amount other than the limit. Could be up to the limit that's owed, or it could be much less. So that's traditional insurance. So there's benefit to the consumer because they can get access to their funds much faster on parametric than they would if it was a traditional product. And then lastly, for the companies, I think insurance companies could benefit from having parametric because they have the opportunity to not increase overhead, because you don't have to have this huge team of adjusters. And I love claims, started in claims, oversee claims now. But with parametric, there's not a need for the adjudication process, because if the policy is triggered, it's triggered. The customer experience is much more efficient, and I think it gives the company the ability to provide alternative product offerings that actually enhance what the traditional coverages and policy offerings are providing.
But from legal and compliance perspective, is a headache for you to deal with a parametric product, or it's much, let's say, easier?
I don't think either is more complicated than the other from a legal and compliance perspective. Um,
Nice.
I would say if you're thinking about traditional insurance products, those are likely in the admitted space, which has a lot more regulatory oversight. So there's maybe more filings and communication with regulators. But even on the parametric side, I think it's important, even if you're doing it through the excess and surplus sort of avenue, to stay in contact with regulators and let them know what's in the marketplace. So even if it's a surplus lines product, it's not a bad idea to, share your advancements and insights for parametric, because at some point parametric is going to saturate the market enough to where the regulators might say, hey, this needs to be admitted now because there's too many of these, right? And so now you're into the regulatory approval for rate changes, approval for form changes, etc. So I think I consider them the same. The only difference really is the adjudication.
That's the best part of parametric. I couldn't have said it better myself, Angela.
Yeah.
I actually do love this. I do love this topic because I think it aligns with a lot of what you've been doing for the last couple of years, Angela. Just knowing kind of Palomar's products, some in the specialty space, and what you guys kind of focus on. Would
Yeah.
love to pivot a little bit into like the distribution data style challenge, right, where AI has kind of come into play. Would be curious, how that started to impact Palomar on some of the core products that you guys offer and how you guys are using technology, how AI is starting to impact. That for me is a huge compliance unknown, right? That's like the one gap around AI is that a lot of compliance that's happened in the past on insurance is all things that have been known, right? There's been litigation for years and years on claims and other things, and now you have computers making actual insurance decisions on a lot of different things, both claims, underwriting, policy services, a bunch of different stuff. I'm just curious how you guys approach that from a compliance end.
Yeah, not that way.
Yeah.
So we don't use AI to make any decisions on anything, and I don't recommend the industry do that because you will find yourself in some sort of situation that maybe you didn't intend to. No different than when years and years ago Colossus first came out, and it was this evaluation tool that large insurance companies were using to determine the value of a bodily injury claim. And you can look it up. And I think it's called Colossus. It's basically allowing someone other than a human to decide something related to an outcome of a policy or a claim. In this case, a claim, and it's just not a good idea. So the way I talk about AI for Palomar and for the industry is it should be sort of a plus one. One of my colleagues said it better than I did. It's like that fourth team member, which I think is a great analogy, that is providing supplemental information and compiling it in a nice package for you to review, right? So AI is here to assist, not to replace. And I think that there are great case studies around the industry to help do things faster, like get through your quotes, for example, compiling and summarizing so that the human can decide what to do. Is this a risk we want to write or not? A specific example for us at Palomar is we have partnered with ResiQuant. And Mike, I think you've met the guys at ResiQuant,
Yep.
Francisco and Omar. And they are working on an earthquake sort of risk assessment tool that's in the market. And it's a great supplement to the rest. And so the way they use AI in their tooling is human in the loop. So even though AI is processing all of these data points and coming up with conclusions that then a human can decide whether they want to utilize or not, they also behind the scenes have human in the loop, someone who is evaluating how AI is coming up with these decision points that it's providing to customers being insurance companies. That's how I like to see AI being utilized, human in the loop. So there's always someone who is independent of AI validating what it's doing, because we all know that it hallucinates.
It does.
And so you can't just, set it and forget it. You got to stay involved the whole time. So I'm excited about AI. I think it's a great movement in the right direction, but it should be viewed as a supplemental sort of assistant, not a replacement for the human decision making and judgment.
I like that. Human in the loop. Human in the loop. That's good.
Yeah,
That's good. I might steal that one from you.
I didn't make that up. That was from Omar and Francisco.
Yeah, yeah. I like that. It's a good way to
Yeah,
think
yeah.
about it. It's a good way to think about it. Evie, I know you deal with this on, with the stuff you're working on. I mean, AI is a big, big impact, and of course, what everybody's talking about. And
Yeah.
AI for me has always been a fear, Angela, from a insurance perspective right now, is because it actually touches every piece of the transaction, right? Which
Right.
with regulators always gets them nervous, because when decisions are happening based on data, it's the human in the loop piece is so important of what are
That's
you
right.
doing with it. It's a tool, just like anything else. Like that'd be like taking an inspection report and never looking at it and just making a decision without seeing it, right? There's always errors. There's always things that need to be reviewed.
That's right.
There is a bigger risk from AI than the cyber, for example, because like 25 ago, everyone talks about cyber. This is the new generation of insurance and yada yada yada. But you you have still a problem to educate, especially the agents, about cyber insurance, how to sell cyber. But the benefit with AI that everyone is using AI in this way or another. And for us, especially by the way, from compliance perspective, it's the AI risk, not just the human in the loop to be in the process to validate data or to validate the conclusion, but also the AI risk, how we are going to build a new generation of wording, of policy wording for AI.
Right. Yeah, agree.
Have you guys, Angela, have you guys come across, and if you can't share, obviously, I don't want to get into how Palomar handles claims, but like the piece for me that's been super interesting with AI that I've talked to a lot of folks about has been the fact that consumers get to use AI too, right? And a lot of consumers now essentially have a public adjuster type of person on their laptop that they can go and ask questions to and use as an adverse effect against the insurance industry, right?
Yeah.
Which is another thing that a lot of folks in the insurance space are starting to think about how they use their AI against the other AIs that are out there in a sense. I'm curious if that's come up for you guys at all or if that's something that you've thought about.
It's something that I've thought about. It's not something I would say we've encountered specifically on an individual claims basis. I think that consumers should be more educated about what they purchased and how it should apply. Ultimately, what the policy contract says and all the endorsements that attach is how the policy will be applied in the case of a claim. And so no amount of AI or public adjusting can get you out of what you purchased from a carrier providing coverage perspective or a consumer requesting payment for loss. So the facts are still the facts, no matter what tools are used in the process. From a claims perspective for Palomar, again, if we think forward, we're going to be utilizing AI as an industry to make things go faster and be more efficient and to ensure that we're more accurate with our assessment of things. But all of the decisions will sit with the adjusters and will sit with the underwriters.
Good, good. That's good. That's good. I love
Yeah.
to hear that. And hopefully it ends up being a tool that will make the consumer experience better, right? The speed and the ability to be able to settle and adjudicate claims faster and use AI as a positive tool for the industry, I think is what all us insurance professionals are hoping for.
Exactly.
Yeah, this is like the education will come from there, like from the AI tools.
Yeah, I will say for us, you know, the AI tools have been great in the compliance world because from a regulation perspective, regulations are public. AI does a very good job when it's stuff that is readily available on the internet. It hallucinates a lot less when the actual answers are there. So compliance research has been one of the best value adds I've seen yet for AI. Like we use all the time, like on doing research of like, I need to find this code, I need to find this language, I need to find where this is. And when it cites it, to your point earlier, Angela, you can go directly to the code and see
Right.
what the language is and have a human go and find it. But I didn't have to go search for it and Google it. I can come up and say, find this piece of code for me in all 50 states, put it into a Google sheet, and then I can go and click on the link and go back and research it. And it saves me a lot of time, a lot of effort, and a lot of money that I can now reinvest into other things around my consumer experience and other things that are more important for the business.
Yeah, and I would just say, when you think about AI, you should think of AI as an intern who's gathering information on a project that you still need to go validate to make sure it's correct and that they didn't miss anything. And so, depending on how you ask AI the question, determines the answer you get back. The other thing I would say about AI is I don't view it as innovative. I view it as efficient because the innovation comes from the human coming up with new information for AI to pull from. So if we stop creating new concepts and ideas and we just rely on AI, in 5 years, we're not going to have any new anything because AI is looking at historical information to inform a present question that's being asked. It's not creating anything new. It can repackage it. It can create a new visual for it. But we all need to continue to be super creative and innovative to provide new inputs into the marketplace so that the industry is evolving. That's the true revolution. AI is just here to summarize it, to make us more efficient, quicker at getting to the answers that we're asking in the present moment. but the true innovation is coming from us. So that's important not to forget.
Yep. That's good. That's really good. That's really good. An intern. My AI intern. I love that.
Yeah.
Love that.
Not an expert, not an expert, intern.
Not an expert. Not an expert. It is an expert. Come on, I let it do everything. It writes my emails. No, 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 no. I'm just kidding. I'm just
Yeah.
kidding. I'm just kidding. Well, I would say, Evie, I would love to switch into the agent broker connection stuff that we've talked about a little bit in the past. And Angela, this is more around distribution and how you've seen distribution evolve throughout. Obviously your career is a huge, huge thing. We could take this so many ways, but at the highest level, like, just would love your perspective on how you've seen distribution change over the last, say, 10 years, just from, Esurance to Hippo to kind of what you're doing today and the specialty products that you guys focus on.
Yeah. What I would say broadly speaking is that distribution as a concept has its rightful place in the realm of production and the ability to grow. The thing that was missing 10 years ago is linking distribution to profitability. Because if you're just growing and you're not profitable, it's a bad recipe. And so if you're able to link your distribution partner to your profitability, and we have profit sharing agreements and all the other things, but it's the over time being able to say our distribution selection for partnership has to be with people who are thinking about the renewal, not just the acquisition. And so being able to close the loop on what does our retention rate look like with this partner? Is this good business in 3 years or not? And so I think cream rises to the to the top, as my Aunt Lorene always says. Cream always rises to the top, sweetheart. So the distribution partners who produce profitable business are the kinds of partners that new companies and existing companies should be partnering with. And the other big difference I would say over time is the number of managing general agencies that have come to market. That's the easiest way to come to market as an insurtech, for example, right? So you can't start as a carrier, and some insurtechs never become carriers because it's a heavy lift, as you know, Mike.
Yep.
And Abby, I'm sure you know as well. And so I think you have to keep up with the viewpoint of partnership in relationship building, because distribution ties into the actual writing of the risk, servicing of the risk, renewing the risk, adjudication of the claims. And so, who are your partners from quote to claim, not just quote? And so, you can't be short sighted. And I think over time, the distribution community has grown to appreciate both profitability as important as growth, as well as being as involved in the transaction as they can. How sticky can we be? I don't want to just be the partner that's quoting business for you. So 10 years ago, you didn't see as many managing general agencies standing up. You saw more, we're getting commission, and that's the end of the story. Now it's like, well, we're getting commission. We also want to service this business. We also have an opinion about who gets to adjudicate these claims, and we want to be your long-term partner. We want this business to be profitable, and we want it to be a scenario where we're sharing in the economics, if that makes sense.
Definitely. Definitely. Evie, I don't know if you have anything you want to add on that subject, man.
Yeah, it's a kind of the evolution of the agents, because they understand, okay, right now you have um, digital platforms to create homeowners policies and auto renewals and whatever, and they must understand, and few of them, yeah, understand that they need to change their portfolio, the way they are doing business. And by the way, we can see it worldwide, the US, Europe, here in Israel as well. So
Yeah,
Yeah.
it's interesting. It's interesting. I think too. It's the piece that always has like gotten super interesting of recent is kind of the distribution partners that have kind of existed now that didn't exist before, right? The platforms, Angela, as you know, right? I mean, I think back to insurance days. Like it
Yeah.
was so revolutionary for us to work with an auto product and work with HomeSite on offering a home policy, and
Yeah.
that combination was like a match made in heaven. And then,
Hmm.
at Hippo, when Esurance wasn't selling in California, and you could get a Hippo quote with an Esurance quote, and it just
Yeah.
combined. But the thought around profitability, and I think what's come out of kind of the first insurtech revolution of like, okay, great, we proved that we can build good tech, great, we proved that we can sell a whole bunch of policies in a whole bunch of different areas and create a very easy onboarding experience, but we haven't cracked the profitability nut yet, right? And that's a piece that everybody's focus is now turned to, and I think you've seen that recently, and I'll call out Palomar. You guys have been very, very successful with the products you've built because they've been built around profitability first, not just growth, but profitability first, and growth
Thanks
can
for the
come.
shout out.
Yeah,
Appreciate it.
yeah. And so I love that because there's a lot of groups that have focused on this, and enough people don't talk about it yet, right? It's still not talked about enough, in my opinion, in the insurance space about how important profitability is. Like underwriting profit as an underwriter, and every year an underwriter, right? I always tell people insurance is made off of underwriting profit. That's where they make their money, right? Like it's about making profit. So
That's right.
that's really good.
Angela, let's talk about a bit about the future from a Palomar perspective. So your main risk that you are insured is earthquake, environmental liabilities, etc., crops, even. How do you see Palomar evolving to support non-traditional risk?
So, Evie, we're publicly traded, so I can't make any future statements as the chief legal officer of Palomar. What I can say though is our current trajectory is a leading indicator as to what we think is important in the market. And if you go out to our website, you can see the product offerings that we have. You can see sort of how we have evolved from just a earthquake carrier back when we formed in 2014 to where we are now with these five pillars that we talked about at the top of the call. I think we're focused on becoming a leading specialty insurer, whatever that means. And so our appetite for new lines of business or getting into existing markets is around the concept of walking and chewing gum, or growth and profitability in the specialty insurance space. So we're consistent in our approach because it is what works best for us. And so the future is similar to today. We're going to continue doing what we're doing because it's working for us.
That's good. That's good. So I'll ask a question that can impact that, Angela, that I think you probably can speak to. Climate, right? Climate is obviously a major factor impacting it. And I won't ask this direct to Palomar, but just, your perspective on how climate's going to impact the overall general insurance space, right? And the reaction of the insurance industry at large. Your thoughts on that would be
Oh,
awesome.
God. How much time do you have?
I know, right? Yeah, that's a whole separate call. We'll keep going for hours.
So, Mike, as you know, Evie, as you're probably going to learn through this conversation, three things are important to me at this point in my career. I'm not at the point where I plan to retire tomorrow, but I am thinking down the line, what do I want my legacy to be? What is important to me as I show up every day for work? So when I come to work, I'm here to be of service to other people. And that's it. Just hard stop here. Whatever someone needs, I'm here to provide as much support as I can. And when people ask me to speak on panels these days and talk about my career in the industry, etc., the three things are sustainability. I'll talk about that all day. I will talk about community resilience all day. And I also will talk about mental wellness. The importance of prioritizing your mental health and well-being, make it as important as your career aspirations so that you don't end up burning out. And then starting at the beginning with sustainability, as an industry, people have heard me say this before, we're very good at post-catastrophe, from a climate perspective, estimating the total amount of loss to the industry. We rush to our Excel spreadsheets, calculate these formulas, and we can know the estimated loss for X is going to be this. What we have got to get better at, and we need to do it soon, is how to mitigate risk and also provide community resilience. And so that equates to thinking about sustainability in partnership with community resilience. How do we make sure post catastrophe communities can rebound as quickly as possible so they stay in a thriving sort of zone and don't fall into surviving, right? And sustainability is something that involves not just the insurance industry, but also capital markets. Insurance linked securities are a vehicle that could partner with reinsurance to create new risk categories of market that don't exist today. Parametric is a big part of that. Partnering with not just private markets, but also the public, meaning counties and cities and states and regions around things that are similar. So where are flooding incidents occurring in counties and states, and what kind of support do we have from a overall rebounding perspective? I think there was a new report that came out from about FEMA and the changes they plan to make there. The federal support is not step one. It's sort of the last step in making claims to recover as a county. I read an article that said counties, it takes them somewhere between 1 and 3 years to recover funds from FEMA. And so that's a gap. So I believe that climate is going to be front and center for the industry because capacity is not going to be able to keep up with catastrophe if we don't create new product offerings, we don't figure out new ways to infuse the market with capital, and we don't create sort of a bridge between us and community.
So good.
I could go on, but I'll stop.
No, I mean it's a hot topic. It's a hard topic, right? Like the FEMA equation of this too is something that, you know, from my end and Evie, I know, you know, we've talked about this in the past. Is I think it actually drives it will drive resilience, right? The safety net of the federal government that's always been there is eroding very, very quickly. And that's going to force communities, municipalities, state governments, you know, globally too, Evie, I think, because, you know, a lot of the world follows what the U.S. does and how that impacts the reinsurance markets, which provide dollars and cents behind everything that we do. Will be interesting to see where it goes. And hopefully when you talk about new capital coming in, this will help in this whole idea of prevention, right? Let's act now. Let's not
Well,
react.
and I would say more mitigation than prevention because we can't control the weather unless you're a conspiracy theorist and you think that somebody's up there controlling the weather. That's another conversation. But to me, we can't avoid where climate is where we've taken ourselves with climate. We can mitigate though,
Yeah.
right? It's the mitigation piece.
Yep.
And it can't just be around property. It also has to be around people. So the definition in the states around the phrase insurable interest is just about property and things that you can tangibly insure. People as, you know, life insurance or health insurance, but not like community. Community is also an insurable interest.
Right.
And it's something we should all be thinking about.
That's well said. That's well said.
For me, by the way, it's kind of connect the dots in along the conversation is from your personal story,
Yeah.
the way that you are talking about the future or the things that matter to you. Yeah.
Yeah, I mean, I think it goes back to the premise of insurance, right? And where insurance started hundreds of years ago, right?
Yeah.
The whole idea.
Well, where did it start, Mike? I mean, you shouldn't answer that because that's controversial where it started.
So I say it in the sense of community and then coming together and pooling money to protect assets, right? And going back to what I think of, and I'm not going to say that I'm a very highly educated person on the history of where insurance started, but the way I've always thought of insurance and the intention of insurance, right, is to make people whole after an event, right, and find a way to do that. Insurance has shifted so much in the last 20 years around profit, loss, I think even
Yeah.
consumers forget that insurance companies are there to make money. They're a business. Like you are chief legal officer of a publicly traded company, right? That holds
Yeah.
you guys to performance standards. And there's a lot of things that happen in the insurance industry today. Whether it's medical liability, whether it's climate liability, environmental risk, like there's just so many more factors now that impact the insurance equation that didn't exist 200 years ago that we just haven't evolved fast enough to do. Like
Right.
even migration patterns of the fact that there's 7 billion people on the planet is a
Yeah.
lot harder to protect against than it was 300 years ago, right? It's just different. It's just different.
Yeah. No, I absolutely agree. And I do think that asset classes of insurance, thank goodness, have changed. I'm no longer an asset. I'm happy about that. 400 years ago, I was an asset. I'm happy not to be one anymore. And I think it's important that we think about the history. And I think Lords of London, for example, they've done a great job acknowledging the participation of insurance in slavery, for example. It's the truth, right? And Mike knows I like having real conversations about things. So insurance has evolved. And I am grateful that we're talking about climate and we're talking about resilience. Climate Tech Connect, Mike, you came to the inaugural Climate Tech
Yep.
Connect conference
And I'll be there again this year too.
in April. That's a great place to go to learn more about how the industry can partner with the public and with tech to figure out how we become better about community resilience and providing new concepts to the market. So all of those things matter. The last thing I'll say on the topic of climate is I always recommend people read a book by Kim Stanley Robinson called Ministry for the Future. And it's about
Come again?
what would happen if we didn't
Angela,
do
what is the
anything.
name?
Ministry for the Future by Kim Stanley Robinson. And it just really nicely illustrates the calamity that could be our future if we're not proactive about how to solve the climate crisis.
It's a great read.
Yeah.
Yeah.
There's even a chapter about reinsurance. I think it's chapter 15, but anyway.
Yeah, yeah, yeah. And Angela, I will say, when you talk about Climate Tech Connect and some of the other, conferences that take place, I do think folks are now starting to have more real conversations
Right.
about what's coming. It feels like, people aren't as they don't hold back as much as they used to. I
Yeah.
learned more from the one of the former heads of FEMA that spoke at Climate Tech Connect
He
last
was
year than
amazing.
anybody I've heard speak in the last 5 years, just because they shared honest information about where things were at. Of like, people need to know these things because
Yeah.
they make all these assumptions, and we see this in the home space, the auto space, and everything else. So, Evie, I know we're almost out of time, man. I don't know if you have any last questions that you want to throw before we wrap
Maybe
up.
let's with a fun fact about you, Angela.
Oh, a fun fact about me. Well, when people ask me, who am I?
Hmm.
I say that I am an Ami. And Eva, you probably know this. Ami is Hebrew for my people, and it is what my grandson calls me. So I'm a grandmother. That's a fun fact about me.
Oh,
My
wow.
grandson's birthday is 2 days before mine. His name is Easton. He's a super cool kid. He just turned 4. I talked to his dad this morning, who told me that he loves running. His dad also loves running, and he ran a quarter mile with his parents the other day without stopping. And so,
Thank you.
yeah, he's an amazing human. He's a new and improved version of the rest of us. So, that's an interesting fact about me.
I love that.
Wow, love that. For me, again, from the beginning to the end, is like your personal story and the way that you are talking about insurance and the word army. So yeah, wow, fully impressed.
Yeah, thank you. So Mike, just to round out, you referenced the guy from FEMA at Climate Tech Connect. His name is Brock Long.